Man, I want to change the words to Jamin, Bob Marley, and
Uh-huh.
we're going to say we're trading. I want to trade with you. We're trading and we're fading because I want to fade you. Matt, trading in and of itself is a trade and a fade, right?
Right.
Naturally, it's with money and against money. That's the way it is.
Yep.
There's the long and the short of it, and you get to decide. Matt, so much to cover today in this crazy trading world. By the way, I am the llama, big hitter. Everybody knows that.
The
Big
dolly.
hitter.
Yeah.
I'm wearing a fantastic knit hat, Matt, with a gorgeous pot leaf on the top of it. Because, every Wednesday we talk weed. No, we don't. But
Wacky Weed Wednesdays.
Weedy Wednesday, Wheaties. Matt, I don't know if you saw this. Well, first of all, this is from a while ago. We had this on the show. Thank you, Hindsight Capital. I don't know, forever ago we had this on because the state of Colorado has banned human-looking things because kids don't want to, you don't want to make them cannibals. Like grooming them to be cannibals is no good. But you can groom them any other way you want. You just can't groom them to be cannibals. Anyway, let me share because Mike Tyson, he's just killing it, dude. He's one of my favorite characters out there. And he's teamed up with Evander Holyfield now, and they have this commercial about these ear-shaped gummies, right? And he's like, this is cherry flavored. And Evander's like, my ear doesn't taste like cherry. And Mike's like, yes, it does. No, it doesn't. Yes, it does. He's like, hey, I ate your ear. I think I know if it tastes like cherry or not. Fantastic. Absolutely fantastic Christmas sweaters and marketing for the ear-shaped gummy that will send you onto the mat. I guarantee you there's some high THC content there. Let's go to du jour, Matt. We talk cannabis, and I've grown some cannabis fairly effectively. I don't think I've bought cannabis in my probably a decade. I mean, why is my question? Why? Come, bring us a chart. Come on, get me out of here. Help me out.
So, CGC just had their earnings last week, which is good old Canopy, which is the biggest of the big daddies, coming in at 1.94 billion market cap. Just had their earnings ramped up here from their earnings on the 8th, all the way to top of this profile band of 456. So we've been in this really since we entered this in June when we broke down, and we went from that $5 range down here to 213, bottom 223 again, ran to 456.
So they've doubled, but
but we're playing ping pong. We're playing ping pong in a range. I don't know. You could trade up to 8 with Lee's money. I'm not going to touch this right now, but
do they pay? Do they? Just like this.
There's absolutely no dividend because they're not making money. It's expensive to grow weed. It's expensive to grow weed in mass quantities. They did 85 million versus 81, so they beat on the revenue side, missed on the estimates on the earnings side horribly, 74% miss. So they were expecting.
Well, I got to tell you, I mean, think about this: their electricity bill has gone through the roof.
Yeah.
And it's not free to run all those lights that grow.
Yeah, so this doesn't look good. Again, there's so much weed out there. There's so much product, and they can't get the federal piece behind them still. So the cross-state selling and all that can't happen. The banking can't happen. So we're going to stay down here until all this happens. And Biden's not paying any attention to anything. So why would he pay attention to this? So.
Yeah, Ed Zachary. Ed Zachary. All right, man. The world. I got to bring this in because we're going to talk about. This was a great cartoon. I don't know where you found this, but this was great. Like the whole Ukraine thing. If it doesn't look like money laundering before, it sure does now, and that's what the cartoon is saying here. That the FTX is the laundry soap. For all the long, fantastically done, by the way. And political cartoons have always been the great, awakener, I think, like talk about free speech.
Yeah.
Maybe everybody should have just been doing cartoons on Twitter instead of sharing articles, because the free speech on a picture says 1,000 words couldn't be more clear here.
Right.
And political cartoons have always done that, but to the great service of our society. Anyway, Matt, there's narratives. There's just narratives, and the truth sometimes is incredibly hard to figure out. The narratives immediately out of the situation in Poland and the missile, like immediately it was a Russian missile. Immediately.
Yeah, immediately.
And even when there's fairly good evidence on the ground that maybe it wasn't, Zelensky is still saying it's Russian. It's a Russian missile. Right. It's a cruise missile they couldn't be pushing harder. Man, this is around.
And then by the middle of the afternoon, even Biden was like, "No, it looks like it came from inside," which is interesting because that was like the first time I've ever heard him kind of
push back on.
Well, say something opposite of this monkey boy. Literally, he's a buffoon. Anybody that if you're all on board with your Ukrainian flag, with your virtue signaling, with all this shit, man, you got some explaining to do, Lucy, because it's
all right. Let me pivot here. Let me pivot here because there is an energy story out of Ukraine, Matt. But I wanted to get back to narratives. Remember when the narrative was that 99% of climate scientists, were in agreement that there's a climate catastrophe coming down the pike, right? Well, it turns out that was bullshit. And now the Daily Skeptic, thank you, Daily Skeptic, for skeptic. I'm having a hard time. I didn't even eat a gummy today, and I'm having a hard time. 41% of climate scientists don't believe in catastrophic climate change, major new poll finds. Before there was the 1% guy that was, someplace drooling, right? And 99 were, this is the science. Now, apparently, there's a lot more disagreement. I only say that, Matt, because we got to get to price discovery. And I'm going to show you two diametrically opposed ideas about nat gas. We're going to talk nat gas here. And this was shared by Leopold Heinrich. The current Arctic cold bubble is supercharged with ice cold air of minus 84 Celsius in the core. That's the picture on the left, 15% colder than last year, and 25% a bigger area, I guess. It's going to shape up to be a mega winter. All right, keep that in mind, mega winter, polar ice. But then you go to Bloomberg, and you're opposed for a warmer than normal winter cycle. Copernicus says, and Copernicus is the European Union's climate change service. All right, so they're already leaning to climate change with their service. And they're telling you that abnormally high temperatures could, there it is right there, could slacken demand for natural gas. I'm actually wondering what Mike Bloomberg's position is in natty gas, because we said it coming on the way in. Trading is naturally a with money against money proposition. Let's go to the natural gas chart, because it seems like I'm actually believing this science more than Copernicus out of the left-leaning European Union climate change modeling.
Yeah, we haven't looked at natty in a little bit, but we've talked about it. We had that spike to 7, sell. We said get back to the 550 level, and we're right about there again. And this is the thing. This is the story of patience, right? This was just a week ago. This was the 7th when we peaked up there. So we're now on the 16th, so call it 9 days. And we've just been settling into the bottom of this profile, which is bullish for me. Like, you're spending time here. You can make it really tight, or you can say below 470. It's your call. But 550 right here, if you want to say I'm shaking out on a close below 550, then go for it. But if it just spikes down there intraday, maybe stay in it for a little bit. But it's 590 right now. Got down as low as 570. I don't know. This looks bullish. It's putting in time. I like when we put in time here for a week. It's not a ton of time, but it's some time. And we had put another week in here before we took off. So we've spent 2 weeks, in essence, 2 weeks plus, right around this 550 to 570 level. And, again, winter's coming. It's not, it's coming.
Well, and it's a great, it's a great discussion, because Marty Armstrong shared, let me share that because I want to share the standard deviation modeling and I want to.
Well, let me also, so we talk about natural gas futures, but if you want to do it on the retail side, you want to do stocks, you can buy the UNH, right? So this is the same chart. So it's trading right now $19. And again, that level in the sand right now on the is, somewhere probably below $17. You're wrong if you want to get out quickly.
Wait a second. We don't use stops because they're not an effective risk management tool. Oh, wait a second.
That'll be in the sex tape coming out with Caroline and SBK.
I'm going to share that too.
SBK.
Big hitter.
Anyway, so I mean, again, if you could pick this up down here, 15.
Hey, you know what? That one in particular, first of all, perfect Gallagher formation that we've talked about.
Right.
I just saw the graphic. I didn't bring it in. I should have, because I didn't know we were going to get a perfect Gallagher. And you think that this is actually the perfect time, like everybody right now, back to those two data points, like the Arctic air mass and then the Bloomberg fluff piece.
Right.
And it's with money against money on the narrative. And we haven't really got to winter yet, Matt. Winter actually doesn't start until December 31st.
Correct.
December 21st. Yeah, exactly. So
we got
pre-winter right now, and who knows what the demand for natural gas is going to be. Right. So with money against money, I want to share but
I just want to point this out. We made this low in late October, and we spiked from that low to 23, and now we're sitting back around 19. So it's come back. So again, if you're looking for areas to become a participant, this basically, from 14 up to where we are, 19 is a decent area probably to start accumulation. So name your risk and start putting it on. You can buy options on these, I'm sure. UNG trades 4 million shares today, 8 million on average. So there you go. It's a lot safer than trading natural gas if you're not familiar and comfortable.
Yeah, and again, you can trade that natural gas spread and have a lot less risk than the outright. For sure, still a lot of risk in it.
Yep.
Let me share the Marty Armstrong article, and this was from November 1st. Why climate change is a fraud. Anyway, he's a big cycle guy. Talks about all the cycles. Talks about rhinos and woolly mammoths freezing with grass in their mouth. Yada. And it comes all to this thing. I can't pronounce that, man. If it was cheese, it's the Beaufort Gruyere. If it's cheese, I can pronounce it.
The Beaufort Gruyere. Let's go for it.
Beaufort Gruyere, and it talks about this, exactly what's going on right now, this giant cold air mass. Anyway, again, there's lots of data points, there's lots of narratives, and apparently 41%, they didn't, back to the 99% narrative, they just didn't interview enough people, because there's plenty of people that would push back on. Anyway, I wanted to just bring that up quickly. Please go to Marty Armstrong's site if you want to have, the Paul Harvey rest of the story, or a different story. If you've been fed one story and you believed it, like we do on so many things in narrative, you just believe what was presented to you with no, Jane, you ignorant slut, point counterpoint. Like, where's the great point counterpoint? Anyway, I want to bring it back to you said we're spending time here, and this is the 3-day natural gas futures continuation chart. And I just want to point out here, it takes time to change the slope of the standard deviation modeling. And and we're respecting this lower momentum level on the 3-day now here for the past, week and a half, coming in a little bit tighter than your 550, like 570. I would not want to see it close back below 570 and be involved in this. But that being said, the longer that we turn sideways or trade sideways from here, the better chance we have to change the slope of the standard deviation modeling. And that sometimes is really important. I mean, this rally here was rejected soundly on this deeply sloping upper momentum level, soundly rejected. And that's a nuance in standard deviation modeling. It's like, yeah, we got a giant bull situation going here in natural gas. It's like, wait a second, you need some time and price discovery to change the slope of the modeling. And that's incredibly important trading, is to not just, bury yourself in an opinion when the slope of the standard deviation modeling isn't in your direction. Please be patient when those things are not there. All right, Matt, enough of the climate cartoonery. Matt, I wanted to talk a little bit about, and by the way, folks, Matt came in hard with a hard no on this next little thing, hard no. And I simply explained to him that I have the mouse in my hand. You don't get to decide what we talk about on the show. I do. I'm the narrative driver. And that is the number one rusher in your kitchen is the Shrimp Mojo. Wearing the Manja jersey, wearing Justin Fields' number. Matt, I was so wrong last week. The over-under was 62 yards. Now, Justin Fields has outrushed 3 NFL teams by himself. The over-under that we need here is how many rushing attempts he will have like RG3 before his career is over. That's a prop bet that should be out there right now. Anyway, we talk NFL more Thursday, Friday. I just want to throw out, I will still be hammering the over on rushing yards. Last week was 62.
All right. So I'm going to take the under again. I'll continue to take the under until he gets hurt in the first quarter. And then I'll finally win one. But this is what it's all about. The college football rankings came out again last night. Not much changed. Nothing changed in the top 5. And his alma mater, the piece of shit, Ohio State, is number 2. And they get to play the University of Michigan, the true University of Michigan, in 2 weeks, not even 2 weeks, but each team has to sniggle in a game before that. Always nervous in the Big Ten to play anybody before you have to play the big game. So
and Michigan's got the Illini, and they laid an egg last week. They've laid 2 eggs in a row.
They've laid 2 eggs in a row. Their running back Chase Brown may be back full tilt, and he's the best running back in the country. He's got the most yards. Here's what I find interesting about this. I still can't believe SC is even in the top 10, but they are, and they still, they really haven't played anybody. But that one's shocking. LSU has beat some big teams along with losing a couple shitty games. They lost to Tennessee. That's why they're below them. I don't understand why nobody's talking about why are we all still SEC, leaning when, Michigan and Ohio State are still both undefeated and will play each other. And why isn't a one loss from either of these getting them in above Tennessee? Why? What's the difference between losing to that or one of these 2 teams?
Matt, the SEC is a superior football conference.
Well, let's have a discussion. Let's have a discussion about
it. Better than a discussion. I mean, it's just a with money against money.
Right.
Head to heads, even their shitty teams. I don't know what it is this year, but that's one metric that you could go after.
Yeah. And then no respect for our boys in North Carolina, still 0 respect. Number 13 at a 9-1 record. So really getting no respect, which the ACC shouldn't. And Clemson's right above them. I think they got to play at some point. Nothing really else shocking about these are, these top 6 teams are the only teams right. Well, maybe again, there's no way SC can be in the championship. There's no way they're not.
All right, let's keep talking about important things, narratives. Look the other way. Theft is okay now. I saw that Washington, D.C. is trying to lessen the penalty for carjacking. Like that's probably going to make for less carjacking when you make it less painful as the carjacker.
Right.
These things make sense to me. Target, Matt, they came out with their earnings and they had a whopping 50% increase in theft, shoplifting, and they have a name for it. I can't remember it now in their line item. But anyway, let's bring up Target. We talked Walmart yesterday.
If you're playing the cognitive dissonance and not expecting the news out of Target here, and you got long hoping for, you got bought calls hoping for the same type of spike that you got in Walmart. This is why you can't play that game. This is why trading is so hard. Each name stands on its own into earnings, and that's why earnings are very difficult. You're better off trying to play, a straddle, a move one way or the other into an earnings right now, because I think they could go up or down depending on how the market feels, right? There's really no rhyme or reason, because I don't think Walmart's numbers were any greater, but they had already warned. So that allowed them, and I'm just going to compare you the 2 charts here, right? So they did the opposite spike, and Target did the reversal spike. And then when you pull back on target on a longer term chart, so let me just bring that up again, huge break, we're down 12% today, $21. And that's come off of where we were down to 148 right off the open, and we've gone straight up. But again, going to the long, there's so many holes in this chart, Bob. There's one here now. Again, but nothing, we didn't get out of really this range of 185, which was the breakdown here. Again, all these points of, concern are make sense why this thing is stopping and pausing. And it did again. And now we're back down into the meat of this profile, but ultimately it's still, the COVID low is 91. Listen, there was some numbers today. Let me throw this up, see if I still have it now. I don't have it up anymore, but the retail numbers were up in October, but the thing that's untold about that, and we talked about this yesterday, was the consumer debt now is at all-time highs.
Yeah, in fact, the credit card debt, the biggest spike since 2007. Let's not repeat history.
So I think what you're seeing is a rush to please the children for Santa Claus already starting, because everybody's tight on money already from the inflation that is transitory, that's been going on for a good solid year now. The transitory inflation from the transitory administration, and we keep grinding higher. And I think that the revolving debt is going to become a problem for the retailer and the consumers 2023.
It's for sure
very obvious. It's very obvious.
Interesting, Matt. Very interesting times. Lee shakes my memory here, and that line item is called shrinkage, Matt. And speaking of shrinkage, let me share this out of the FTX saga. And this was a share from this. Hold on a second here. This guy, again, Gurgavin. I don't know. This FTX thing keeps getting weirder and weirder. And then when you look at it, it's SBF and Caroline Alameda must be held accountable. 11/18, their sex tape will be released on this uncensorable webpage. My favorite thing about it, though, is the comments. And in particular, Steve says, I'd rather watch my parents going at it than... Oh, I just threw up in my mouth. Thank you. All right, Matt. I don't know if you know that.
Here, let's talk a little bit, if you believe in the slowdown and the recession that could or could not be coming. Chips have had a heck of a run, semiconductor chips. And we have a big one today. We have NVDA having earnings coming at the close today. And I'd like to look at both the Smash, SMH, and NVIDIA charts, if you don't mind.
No, because I want you to, and then I want to. I love doing this because we've never looked at these two charts together. Like you go first, and then I go and see what a standard deviation guy thinks about it, and what a profile guy thinks about it. So
I think that we've had a 70% run here from 108 to 170. Let's call it 65% run. I mean, since mid-October, 1 month, this thing is up 70%. I don't care what the earnings are. I'm just saying, maybe it got a little ahead of itself. Again, I don't want to buy calls or puts necessarily. I would do some type of back spread, maybe. I would lean short into this number, just looking at this chart, just looking at this overall chart. And if I fractal back, what kind of risk am I looking at if I'm leaning short in some type of environment? Well, it's been 345, it's been 108. I suppose it could rush all the way up to 240, which is about half back. But the only problem is we just got into the value zone on the longer term chart, and then we, spiked out of it.
Right. They were able to, they were going to drown, but somehow somebody threw a preserver and pulled them out.
And again, so maybe 200 on the upside, because that was like kind of the last low too, was 205. So, and that kind of matches up with this profile. But again, it's hard for me to be very bullish after a 70% run if you're not involved, so if you're just picking it up and looking at it today, and that's what we're doing. So you have this big number coming at the close today. This one will move the market. I think the market's kind of, again, this market is so thin right now. It's already trading like holiday trading. And then the smash, which is the composite. Again, I'm starting out from the broad picture here. And again, this has had a huge run, Bob, huge run. Let's come back in. For a index ETF, this has gone from 167 all the way up here to what was it, 239, and we had a huge reversal yesterday, and you can see that here on the short-term chart. So we've gone from 229 all the way down here to 218 already. And again, huge move in the last month, like year type moves that you're seeing in less than 20 trading days. This is not normal. This is not healthy market.
Well, the crazy
it's not
thing
it's just not, it's not healthy. It's so illiquid is what it tells me. It's like crazy.
My thought was it might be the new normal.
Yeah.
It might be the new normal for
Maybe.
a while until
Maybe.
they can shake all of this money out of the system. And when I look at SMH, and this is I'm not a stock trader. I never have been a stock trader, but when I look at this chart as a commodity, from a commodity market perspective, this island day is as dangerous of a candlestick or whatever bar chart that you can have.
How about just those
It's
last,
like-
how about
it's
those last 6 successive bars are all weird, every one of them.
I mean, this one here, everybody is like, let's walk across the field and,
Agree to not kill each other.
Well, it's like the bell has rung and we've won. And not only have we won, we're going to stick it to you for 4 or 5 more days. Right. And then when this happens, to me, generally, it's a ... the other way. Now, that's commodity lingo for a limit down, limit down, limit down, ... You don't talk about that very much in stock trading. That's a commodity lingo, but that is a brutal candle chart right there. That is absolutely brutal. And it's more that it's not that they trapped so many people here, because you can't trap that many people when it's only one trading day, right? It's just the performance was so brutal. The giant gap opening higher, close lower, and then follow through again. And if they lose the momentum level, 216 today, it'll be like 218 tomorrow. If they lose that momentum level, forget about it. This thing is going to crash and burn. Anyway, that's a commodity mind working, though. But
it's not a commodity. So
it is not a commodity. I will give you that.
And when you see these 70% moves or 30% moves in a short period of time, especially in index ETFs, it's shocking. It's not a normal thing. So, anyways, just
normalcy. What is normalcy? Man, do I long for normal days. Remember that? Shit was just normal. Yeah. Not so much. All right. I don't know what else to cover here today. Oh, you know what I wanted to cover, Matt? Did you know, Matt, that Hulu has live sports?
Yeah, I watch it.
It's great because I've been watching a lot. I'm a giant hockey fan, Matt. Had season tickets to the Blackhawks for years. Some of my earliest sporting memories was the old Chicago Stadium. Getting autographs at St. Philip the Apostle on father-son sports night from Stan Mikita and Bobby Hall, and Hulu's got a great lineup of hockey, right?
Yeah.
And I watched your Red Wings last night. Brutal, dude. Winning 2-1, 43 seconds left, right? The Ducks tie it with 43 seconds left, and then overtime, 4-on-4, the Red Wings are just dominate for like 4 minutes, 3 minutes, and then give up just a brutal goal and lose the game.
That's hockey, man. Hockey is brutal. I mean, it's tough.
Hulu is tradable? Yes. Can we trade Hulu?
It's Disney, so yeah, sure, you can trade Disney.
All right, let's look at Disney because we haven't looked at it. So we didn't even bring it up. It's not Hulu, it's Roku. I get those two mixed up all the time. Stock charting.
Yeah, I mean Disney. We talked about it.
They missed huge, right? By $1 billion.
They traded down to 96 now, ramped up to 84. the big picture, not much has changed. I think we got to the COVID lows for Disney. I think we talked about that already. Not quite, excuse me. 79 was the COVID low. So we got maybe a little bit more work. That's just getting you back to the equilibrium. This is, I guess, what you're saying is until everything goes back to the COVID lows and below, we can't go back to normal. Is that what you're saying, Bob?
Yeah, that's 100% what I'm saying. Like these markets have to go back to reality-based trading. Somebody shared it again the other day. It's like when you think 18 times earnings is normal and okay, and by the way, Matt, amazingly, there has been this reversion in a lot of charts, right? We've covered a few charts in the last couple of weeks, right, where it's 1x or equal. Their valuation is 1x their earnings or 2x, back to incredibly normal looking analysis from a stock perspective. All right, man.
Some, not a ton, but
not all of them for sure. In fact, very few of them.
So, let me just bring up another one because this was so telegraphed. El Presidente announces he's running again. And again, we ran ahead of this. They thought it would be last week when he would announce it. Well, he announced it last night. And, again, if you've been selling this thing, I mentioned this last week when Mark asked about it. Well, what do you think about DWAC? I'm like, sold. You got it once, you got it again. Came back before they announced it again, sold. So it's paid nicely if you were paying attention. This is not something that's going to change this to be a better platform. So sold. Every rally, sold.
That's like the climb every mountain, Matt, sell every rally.
Yeah.
Sold. Anyway.
Yeah. So again, the SMH, NVIDIA, I think you're better off. And again, they're probably not cheap, but buying some type of straddle is probably the way to go. I would get closer.
Yeah, I like it. You can
I would buy
in
the money, even whatever, like wherever we're trading, right? I would just look at NVIDIA. I mean, at 170 and go, I'm buying 170 calls and puts, and whatever that costs you, you need it to move more than that. So that's the play. It's just too risky to take one side or the other right now. Other than that, that's my opinion.
All right. And like the over under, Matt, and the line, it's incredible how accurate pricing options markets are in general. It's amazing. It's truly amazing. All right, what else? Anything else?
Well, I just saw this again. Elon is, kind of clamping down on the softness that existed, on the wokeness that existed in Twitter. And today he's saying he will find somebody to run the company because there's massive restructuring after staff told to commit to new hardcore work environment by 5 p.m. tomorrow or be fired.
The amazing thing is somebody could say that with a straight face.
Hardcore.
Like, have they ever labored?
Has
anybody ever labored for a bricklayer? Ever done
no
that?
more free food at Twitter. No more pets.
Harsh working, like the
no more pet babysitting services.
Why do you
no more acai bowls for free.
Why do you think the guy in Kentucky trended when he took us? He raced home from the coal mine and took his son to the Kentucky game. Yet there's a harsh working environment over there in Twitter land in San Francisco. I mean, give me a break. What a complete joke this world is. Oh, anyway, that's what we got. That's what we got. All right, listen, Matt, please visit us at marketfunnels.io. Please
tomorrow we'll have, I'm sure, Thursday night football, which is actually a good game, by the way. I don't know if you know.
For once, yes, I saw
the first one. The next few are actually pretty good.
Green Bay, which saved their season last week.
Yeah.
And I read another article that said that the Minnesota Vikings are the worst 8-1 team in the history of the NFL. I don't know how they. It's just narratives. I have no idea what the metric.
This is Philadelphia the second worst since they're 8-1.
Very possibly. Yeah, very possibly.
Right. But somehow they're winning. It's hard to deny the scoreboard there. So, even though I'm no fan of the purple people eaters, I would like to see Aaron Rodgers somehow end up on top of the league again this year. Somehow it's gonna happen. I'm telling you.
Wait, say that one more time. I was reading something else. I was not paying attention to you. What did you just
I
say?
said I'm not a big fan of the purple people eaters, and I'm actually
I never have been.
And I'm actually rooting for Aaron Rodgers to somehow end up on top of the pile of the Norris division.
I'm still not. I can't go there. Oh, I can't. That just gave me indigestion just thinking about it.
But the reality about
big hitter. That just turned into the big shitter for me.
But the reality, Bob, is they're only
here. And now let me just tell you about what the reality is. The reality is this game is not. It's not a complicated game. Mm-hmm. And when you have a quarterback that's really good, like Aaron Rodgers, and now he has found his receiver. We talked about this the other night. He's found his guy. You know, it was Jordy Nelson, it was Craig Jennings, it was any number of guys through the years that he just knows how the guy's going to run routes. He knows where is he going to be. He's comfortable, knows the guy's going to make the catch. He throws 3 touchdowns to the same guy. Like, you tell me that's not in his mind. Wait a second. He just threw 3 touchdowns to the guy, right? He's got his guy now, and that's what's dangerous for the rest of the.
Not only that, but look at this tough schedule they got. The Pack, they got Titans, not an easy win, even at home. At the Eagles, at the Bears, or home against the Rams, who they're not playing well, but still they're the Rams. At the Dolphins, home against the Vikings, home against the Lions. I mean, this is no easy task. So for me to go out on the, put a small wager on. Just put a small wager. It's $2.
Yeah, I wonder what their odds are to win the NFC North.
I don't know. But I like that. I like a $5 bet on that right there. I do.
Matt Davey, you're the king of the $5 bet.
I mean, they pay.
That's our paid room for gambling. The $5 bet.
The $5 bet.
The $5 bet.
That's right.
It's going to cost you $1,000 to get into the room. It'll take you 5 years to make your money back. That sounds like a government program. All right, Matt, thank you very much. Thank you, Lee. Please join us, marketvitals.io. Please go to Amazon.com, support Jeff Bezos and Manja TV, and buy some shrimp mojo. Please, I want to say this too. If you're a restaurant, a bar, a mom and pop, you know somebody that is, you're invested in something that is.
Jimmy Urio should be buying the rub from you.
Jimmy should, I'm a little bit heartbroken that he won't use it as his house Cajun spice. He's buying, believe me, that the Brands is buying a Cajun spice. For sure they're buying a Cajun spice in that restaurant. If they're not, I question their ability to cook, knock your face off, knock your mouth out, good tasting food. If you're buying a Cajun spice for your kitchen and you don't think, or you don't even want to consider the narrative that I'm going to throw out here, that the Shrimp Mojo is the best Cajun spice on the market, bar none. And it's not even close, by the way. It's not even close. It's the best Cajun rub, Cajun spice for anybody's kitchen. Anyway, go to Amazon.com and buy some, for God's sakes. Thank you, Matt.
Thank you, Bob. Oh, Lee says plus 3,000 for the NFC division. Packers. Again, I like the $5 bet. Love it. That's even better than the odds I was giving the other guy. Wham!
All right, Llama.
Odds have been updated. Take it. $5.
See you tomorrow, man.
And they'll end it with a big win on New Year's Day against the Purple People Eaters. Just love it. Just
right
break their heart again.
All right. See you.